Welcome back to my video. On this one, there's been a ton of changes going on in the market. So as you already know, I'm going to go over my portfolio, going to show you what I've done with this last crazy week. Lots of stuff going on, lots of big changes. And I'm going to show you how with a realistic portfolio, you can make over $100 a month. Now, doesn't that sound good? None of that $100,000, none of that I got $1 million, none of that 40K. Small, manageable portfolio. All right, let's get started. You may know, since I've done this last video, the stock market has super crashed, like huge corrections all over the place. And I made some changes. Felt like I needed to do a few things here. Now, overall, what I'm going to say to anybody that's out there, if you were buying things that you were confident in and they've gone down, it's really up to you at the end of the day. Not financial advice, but stick in there. Keep dollar cost averaging, keep it going. You pulling out all your money, especially if you're at a loss. Like you look at my medical properties trust, right? I'm down almost $500 because I think a lot of what I bought was actually I can just click it and find out here. As you can see, it gives you your breakdowns on Fidelity. I'm sure most sites would do this, but a good chunk of what I bought was at $9.95, and we're an entire dollar. Was that dollar 80 78, something like that, below that, right? So some of my investments I bought 802, some of these kind of smaller ones are still below this, but this is a good time to dollar cost average. If you kind of buy in at a lower number, once it goes up you make more money. TSLY, which strangely enough I thought would drop in all of this, is holding strong. I believe as long as the market, Tesla, doesn't drop to nothingness, I think they'll be okay just because of the type of fund it is. ETFs and things like that tend to not fall quite as hard as the main stock, but then they kind of get hit on the other side when those other stocks go up. They can't climb with them, so they usually take a fall, just not as much, but can't keep up. Now, one thing you may know from my other videos is this cash position has gone down quite a bit. And that's because, well, two things. The main thing, a medical properties trust. I had about 400 shares the last video I made, and I bumped up to 570. I basically doubled down. I put in another position. Actually, it would be this one here. I basically put in a thing, and I said, well, if it gets to, let's say, 751, I think it was about 830 at the point I put this in, kind of dropping from the nine. So I just had another thing like, yeah, if it gets like 751, I'll just do it. It did it, and it did it quick. This position probably would look a lot worse if you think about it, because it would just be just these couple ones right here. And they're overall they're down, but this last chunk I put in, as you see, it's still up $98. So this would be down like $500 without that in there. But this is what I mean. If you get in there when things are going low, like I feel strongly about medical properties trust, and you put in a little bit more money, overall it's going to work out. I mean, it's not up a ton, but it's still up above the 751 that I put that in. Another big difference you may notice is SoFi. I had SoFi sitting up here as my, I don't know, I think my second biggest position. I think it actually became my biggest position after MPW dropped so much monetarily wise. So right now I sold my SoFi. I know I felt bad about it, but I did it. And basically I tried to do the same thing. SoFi has dropped tremendously over the last couple of days. I believe it dropped at least $2. Let's see if we can pull up SoFi real quick. Um, so as you can see on the 31st, right, we were sitting at close to 1140, something like that. And then on the first, it dropped down to like 10. And then on the fourth, we were at 9. And then just drop. So I went in and I did something that I didn't want to do, because I technically did sell at a little bit of a loss. I'm not going to lie. I sold my position at about 830. It's currently at 865, but still kind of projecting down. So what I want to see is if it will go down to 7, which it may not because it's kind of already bounced out here. So if it goes back up to 9, I may just go ahead and buy back in at 9 and see if it'll keep going up. But that's what I'm trying to see because it's been slowly just creeping down, creeping down, creeping down, creeping down. Maybe I'll update my position and say like 820 or something like that, just to make a little bit of money and just ride it out. But I'm trying to use arbitration just to see if I can get some more money back that way and kind of go from there. You see the pre-market is showing it as being down a little bit here. But all right, let's get to the good stuff, which is going to be the dividends. How are the dividends looking? All right, so first things first, count is currently at $13,625.24. Now, as I was editing this, I kind of started to think to myself, someone out there is probably thinking to themselves, $13,000, almost back to $14,000. There's no way I could get $14,000. And I just want to stop a second and just tell you, yes, you can. Yes, you can. I don't have any type of a crazy job. I don't have a inheritance and a lot of other stuff. But realistically, most of what I did, I got at about $7,000, right? Most of the dividends and all that stuff are things I bought with about $7,000. So realistically, let's say you're 20, $7,000 divided by, let's just say 10 years, $700 a year. Can you save $700 over a year? We can divide that out by 12 months. $58 a month. So in 10 years, can you save $58 every month? And yes, you absolutely can. It's very doable. If you have an actual full-time job, this is nothing. This is truly nothing. You can get there. I promise you. I promise you. Just keep at it and keep trying. All right, back to the video. All right. As you can see down here in the main account, uh 1924.92 is what it's estimating for the dividends. My phone is beeping. I wish they would not be doing that while I'm trying to make a video. Anyway, top of the list, not QYLD. It is TSLY. TSLY still holding strong. It's giving out 1,098.11. Let's pull up a calculator here real quick. As you can see here, we're doing 83 cents. At least that was the previous one, which actually I believe is supposed to pay out. If not today, in fact, I think it was today. I think I saw I'm getting about $91 for the month just off of TSLY by itself. So I don't really need that up there right there. Actually, no, I do like to show it off here. So 83 cents. We have 110 shares. Comes out to about $91. Second one, we got Medical Properties Trust, which once again is tremendously down from literally what I bought in, but overall it's doing okay. It's taking a hit just like most of the market. 29 cents. I now have 570 shares. So let's do 29 cents times 570. It's $165.30. I believe Medical Properties Trust is quarterly. So you got to divide that by 3 just to kind of get a little monthly number. So about $55 to match. I guess you can average it out to say $60 from TSLY. TSLY jumps around a lot. Some months it's paid 80 cents, some months it's 60, some months have been 40, some months have been $1. It's really kind of bouncing around. But overall, I'm enjoying the ride so far. Ashfield Trust right here. Can't really count that one. They're not paying a dividend yet. I'm still hoping they'll turn it back on here, but I bought 200 shares just in case. Based off the last number they paid, which was only 6 cents, that would be about $48, but you can't really count that. Mo, haven't bought really anything extra in it. Have 11 shares, paying out 94 cents each. I believe that one is quarterly as well. I could be wrong on that. And then JebQ. I'm thinking JebQ is going to be kind of my safe haven. Like I go back and forth between that and SCHD, and a lot of you guys really like SCHD, but I don't know if I can get behind the 3% interest or dividends and stuff. I don't know if I can do it. I may try to put some of my portfolio into it and give it a chance here in a little bit, but right now I'm more looking on growth and things like that. So that's what I'm going to really kind of stick to right now. But as you can see, even though everything's been down, still up. Let me see here. Any of my parts of it? Yeah. So it looks like the some of the dividends that have come out essentially are actually a little bit negative now. But that's really the difference of it. Everything else where I actually bought in a little bit earlier, it's all fine. And even the dividends, I mean, they're down 1%, 2%. That's not terrible. Not when you get a dividend on top of it. All right. So this video doesn't go too long. Here's my last little two things. So I got this Franklin Street Properties. This is a REIT that I saw on a list from the Bowtie Nation. It really was the lowest one on the list. And I was just like, I kind of use these as like lotto tickets in a way. Like Hail Marys, who knows? If it lose it all, does it really matter? Of course it matters, but it's not the end of the world. So I only put in $154 here, as you can see. And it's already up to $201. And it's up 30%. So that's a pretty good jump. But 154 to 2 is not a huge jump one way or the other, but it is a positive movement. It is a REIT. They do pay out a dividend. It's nothing too crazy. And I don't have a ton of shares right now. But I look at this as something that, hey, if it goes up to $20 at some point, I'll have made, like $900, something like that. And something you can be proud of, you can be happy with. And then my final thing here, as you can see, this position right here. This was a super Hail Mary that I went with. HYSR, they made a new technology and it's in the clean energy type area. From my understanding, they made a way to convert hydro energy to water without the emissions. So, a lot of things that are going on in the world are around a cleaner earth, cleaner environment, switching to solar, switching to electric cars, all this stuff that's supposed to protect the environment. But the main problem with a lot of that is it still makes emissions, it still makes like poisonous gas and stuff like that. They apparently have a technology. It's brand new. They've only kind of done like a prototype and a slightly bigger prototype, but they have a way to do it without the emissions. So the way I see it, this company either, well, one or two ways. They can either sell this technology to other companies like a Tesla or something like that, something that they can maybe put in their cars to make them more efficient or make them um, less cost effective, or just simply a you know net carbon zero, any of those type of things that are out there in the world. They can do that and make a ton of money. Or if they maybe put this in some type of a solar panel or some type of way to convert energy, a lot of companies that are trying to be cost centric and trying to protect the earth will be really into this. And it's only a penny right now. I mean, it's basically a penny stock. It is down $22 for me, but as you can see, I have 50,000 shares now. I actually have a few more than this. I got like my original 3,000 that I bought. Um, but as you can see, I've put in some pretty serious money into this. Um, this is truly my Hail Mary. Like, let's just see what happens. But I like the idea of a new technology, something no one else is doing. Their main competitors would basically just be, or their main threat would be someone else that has more money that can jump up, try to do what they're doing and do it faster. But right now, they're first to the market. They're the original. And sometimes it doesn't matter if you have a new technology. Sometimes it just matters who's first, who has the bigger name. Look at something like Lucid or Tesla. I've heard a lot of people say the Lucid car is better, but the name is Tesla. Who was there first? Tesla. Who's number one market share? Tesla. So that's just kind of how I look at it. But anyway, that's all we got for today's video. Hopefully this wasn't too long. I may have to edit it a little bit if it is, but in case you didn't know, I's a hobo. And just to sum it up, if you had an account that's around $13,000, we can round it up to 14 if you want. You can still make about $166, and here's proof of that in front of you. All right, thanks for watching.